Right guys, welcome to a new video. Now today is pretty cool. We've been doing, well, over the past couple of weeks I've been obsessed with trading options. Now I'm just going to try and move my mic. So we're trading some options today, and just need to make sure I'm on the right screen. So what do we have here? Well, basically what I have done is I've brought, if we look down here, if we go to the portfolio and look down here, we have, okay, Apple, January 4th. So January 4th, this contract that I'm about to buy or have brought is going to expire on the 4th of January. Now I've brought a call for 160. Okay, so basically I've said I'm going to buy this, I'm going to buy Apple, okay, 100 shares for 160. Okay, well, why have I done that? Well, the reason I've done this, the contract cost me, you can see here, 1.39, okay, which is rounded up to 140. So I'll put the average price and the cost basis together. So with a precision, you get, so one contract, you get 100 shares, okay, of the company. So, you know, Apple is a, what, $158 company. 100 shares, you know, it's a lot of money. However, this contract has only cost me $140, okay? And you can see my P&L is already $44. So in a sense, you know, 10% of 140 is 14, times that by 3. That's like, you know, nearly $45. That's nearly, that's 30%. So in effect, in theory, I'm up 30% on this trade with $140. Pretty crazy. And basically, I'm just going to show you why. So let me just switch over to this one. So I'm just going to switch over, and I excuse that I'm in my dressing gown. I've literally just, you know, it's normally how I trade. So basically, the Apple. So this is Apple. Okay. So why did I buy 160 call? I bought a 160 call, which basically means I'm going long at 160. And basically, well, the price is only at 158.60, so why would you buy call to 160? So the higher you buy the calls, and then basically the cheaper the calls are to buy, or the contracts are to buy. And if you can see that the price is going in your direction, the contract's going to become considerably more valuable. So for example, say if I brought the 160 calls here at a price of 157.40, okay, here. And I could see, I was going to imagine that these three candles next were going to be green, bullish. I know they're white, but bullish. I could therefore buy a contract. I could buy a call for 160 like I have done, and basically buy it before it's going to happen. Okay. And my contract then becomes considerably more valuable. So like, I'll just show you quickly. Let me just switch back. So you can see on here, I'm up nearly $50. And like I say, the cost basis was $140. So, you know, I'm up a hell of a lot of money. Like, in theory, this is a demo account. I'm just practicing to, you know, I'm learning options. It's funny. I have two options books that came in the post today, and I haven't actually read them yet, which is quite funny, because here I am trading options and I haven't really, you know, read the book. I mean, I've done so much excessive learning on, you know, external to books. But yeah, so basically I'm up like $50 on a $140 trade. It's just insane how options work. But I'm just going to give you like the simple way of looking at it. So let's go on the next one, SPY. So I've brought SPY, and the contract's going to end on the 31st of December, okay, which is today. So I want to sell this today. So I brought calls. You can see here call, which is basically means long, okay, and 249. Okay, so let's just switch back. So why did I buy those? Well, I brought those because before I brought them, okay, the SPY was down at around 248.50. The SPY is now at 248.95, so basically at my cost basis, at the price that I was buying the call. Now the higher this goes, the more valuable my contract's going to become. If we just switch back, just bear with me. Yeah, so I brought a call 249, and it cost me $96, and I'm up $25. So I could just, you know, cancel this contract out now and basically take, you know, 100%. So I could just take that out now. The commissions were $159. The amount it cost me was $89. Okay, and then I can just, you know, I could submit that now, and that's basically that trade. And you can see here, if we just make this a little little bit here so you can just see. Okay, so the next one we have is, let's have a look at this Amazon. So we have an Amazon and we have January the 4th, and I basically brought a call for 1547. Now the reason I brought the call for 1547, let's just minimize this. So on here on Amazon you can see, so I've basically brought a call contract for 1547 up here, okay, where this horizontal line is. So basically I brought in, you know, probably around here at 1505, okay, and the higher this stock goes, the higher Amazon rises, the more valuable my contract will become. Let's just go back. I need to find something a little bit easier so I can just keep alternating from one to the other. But yeah, so basically if you see on here this Amazon, we have sorry, I keep saying Amazon when it's Apple. We have Apple January the 4th 160 calls, and you can see here this is where I brought in. So if we go to Apple 160 call here, you can see I brought the my cost basis was 139. Okay, let's round it to 1.4. So 1.4 is my cost basis, which is here, okay, where the arrow is 140. And now the contract to buy that same contract is now worth 155. So you can see that's why I'm up $50. Okay, now you can see Amazon is dropping significantly. Let's have a look why Amazon is dropping. So if I just go on to Amazon here, you can see now well, let's just go, I don't like the charting on this, so let's just go back. So look, Amazon now is now considerably more. So it's getting higher and higher. And like I say, you know, I don't know if I'm right, and I'm not saying I am right, but what I am forecasting, you could say, is that this, you know, stocks move in waves, and this is like wave 1, part of wave 2. We had a bit of a come down, a bit of a decrease. We came to the EMAs, respected the 9 EMA, respected the 20 EMA, and now we're bouncing off. So if we can get above this 200 EMA, which is the red line here, if we can get above this to me, in my personal opinion, is a bullish move. Now, the candle, this candle here opened higher than the previous candle close. Okay, not the wick, the close, which is a bullish sign. But this candle here opened basically at the same, you know, a little bit lower, somewhat lower. So which isn't that bullish. But if we can try and get above the 200 EMA, just trying to keep this simple here, if we can try and get above 1522, okay, the price of Amazon 1522, then you can see here now my Amazon call is going up. So I'm now up $68. Although this option did cost $1,661, so keep that into perspective. So this contract, Amazon's always going to cost expensive, or more expensive than others, because obviously the stock is higher. So the stock is currently $1,500, so that's why the options are a little bit higher. But you can see here up now 81. So I'm just going to go through a couple more. I mean, we have GE. So I was down quite a lot on GE earlier, and I'll just go through why I have puts on I'm sorry, I had puts on GE earlier, and I have a call on GE now. So we go on to GE, you can see here I brought in on GE, and we can see where I brought on GE, and it was 0.18. We round that up to 19. Okay, so basically 0.19 was the contract. It cost me 0.19 cents, so 19 cents. Okay, but 100 of those shares in one contract, so it's basically $19. Okay, so it cost me $19. Which is just crazy. It cost me $19 to buy this contract. Now, this is the contract, the chart of the contract. Okay, so you have a chart of a stock, and this is a chart of the actual contract that I've brought. Okay, so you can see we're moving in waves. So we've, you know, waves up and down, basically directional, kind of, you know, up and down, sideways. And you could say I brought on somewhat of the high point, but I do believe we're going to go to 30 cents. And possibly higher, maybe to 42, and then I've marked 0.63 up here, just as a reference point, not really as, you know, anything else. But so if we have a look at GE, so we have GE, and you can see on Amazon now I'm up $150, just to make sure it's on the right screen. Yeah, so Amazon, okay, we've just gone down to $115. That's okay. That's okay. So once this goes to around 160, you can imagine that's basically, you know, it's nearly 10%. The cost was 1,600. If I'm up 160, basically 10% on my investment, which is incredible. So if we go to GE, you can see I have GE here, GE, General Electric, and this is an expiry for the 4th of January. Okay, and it's a call, and I bought 750. Okay, my price, I bought the strike price at 750. One contract, and this cost me 19 cents. Okay, so 0.18, round it to 19. Obviously it's $19 because 19 cents times 100 is basically $19. And you can see here, this is the chart of GE. So this is the chart of GE's the contract I have for GE. So if we show you over here, this is the chart for GE down here. Okay, and I believe we are going to, you can see we're moving in waves. Okay, we've had a bit of a decrease, or a bit of a, you know, down sloping trend. We bounced off the 200 EMA, and now we're coming past the 9 EMA. I do believe we're going to try and reach up to this 0.786 on the Fibonacci retracement, possibly going to surpass that. I would have probably sold by then anyway, but I feel like this is a bullish movement, so that's why I got into the trade. So basically, let me just switch back. So you can see now we're in quite decent profits with all three of the trades. Soon to be GE, I would imagine. So you can see here, just to break it down, so this is GE's, this is the chart of my contract I have brought for GE. So moving in waves. Okay, I'm considering as wave as like an up and down movement. So when I say waves, I mean like an up and down movement. You know, it's kind of the same movement, so the same height, the same depth, coming up and down. So I always say stocks move in waves. So this is basically, you know, we're at the low point, and now we're starting to rebuild. So if we just zoom out a little bit, so you can see here, GE has fallen considerably. So I brought in at 19. Okay, so let's just get the crosshair. So I brought in at 19, which is, you know, around here. So if I just get the horizontal line, just to denote that, so you can see there. So I brought in here. Okay, so we're just waiting. This is on a 30-minute candle, so the next 5 minutes. So we're just waiting basically to come back up. You could see this as support. So we found some kind of support around here, around the 19 to the, you know, 17 cent mark. Now we're hoping to surpass that. Like I said, this contract only cost me $19. So it's just basically, I'm just kind of, you know, trying to learn and trying to put it into practice. I could have brought 10 contracts, so, you know, that would have been 190. I would have been a bit more, you know, better to kind of show what I'm trying to get at. But basically, just imagine that this is, you know, 10 contracts, and we're talking $190. We're moving in waves. I believe that if we just go back to GE, I believe that, and you can see Amazon now is following what I kind of said. You can see now we've reached our first target and the second target. So like I said to you earlier, the higher Amazon rises, the more valuable my contract will become. But anyway, so GE, yeah, I believe GE is actually going to go a little bit higher, because this to me looks fairly bullish. Fairly bullish. I mean, we bounced off the 200 EMA quite respectably here, and now we are at the 9 EMA. And if we bounce off here, I mean, let's go on to the 15 minute. So depending on what this next 15 minutes, you know, does, if we fail and we go below the EMAs, I'll probably cancel the contract. I'll probably lose a couple of dollars, but it's pennies. It's not a lot of money, so that's okay. But this is kind of just, you know, if we can get above 760, you know, that's bullish. If we go below 748, you know, 3 cents away, then I'm probably going to get out of the contract. But I'm going to watch these next 13 minutes and see what happens. Like I said, on Apple, you can see moving in waves. So you could say wave 1, wave 2, wave 3, wave 4, and now we're going to have wave 5. Like I say, I will possibly, on Apple, I will possibly sell at around 159.45. That's when my contract, as you can see, my contract is worth considerably more now. So this cost me, like I said, $140. My P&L is 55, so that's, you know, quite a good return on investment. You're talking 35%, and and we have on Amazon, Apple again. So I have two Apples. That's why I'm getting confused, because I keep thinking one's Apple and one's Amazon, because I've been trading Amazon as well today. So you can see on Apple we have one for 162 as well. So 160 and 162.50, both in the green, because obviously Apple is rising. And then Amazon. So these are the three stocks that I'm currently trading. I made a couple mistakes earlier. Well, actually, I didn't even really make a mistake. I logged in on this is Interactive Brokers, and for some reason I was already in a position. So I don't know what that's about. I was already in a position for I think it was like some USD, like it was a foreign exchange or forex trade. It was a currency trade, so I just had to cancel the position straight away. So that's why it says unrealized or realize minus 95. So I don't know what that's about, but either way, kind of just giving you a bit of a breakdown on what I've been doing, and because I haven't really posted a video because it's been obviously Christmas, and today is the 31st, so it's going to be New Year's and stuff soon. So I just wanted to give a bit of a quick kind of introduction to where I am taking my trading and why I've kind of chosen to do options instead of actual stock trading, because it is a lot less riskier. Okay, there's a lot less risk. I think I might have just gone through why. I mean, obviously the contracts cost so little, and it's a lot less riskier than trading stocks, because you can basically it's kind of like oxymoronic in a sense, because, or contradictory, because you can have less risk, but you can actually get higher returns, which sounds like oh, okay, but no, you actually can. That's the crazy thing with options, if you kind of study and do the homework. I'll probably do another video going over everything, because it's so confusing. I still don't, I mean, I've only been doing a couple of days of research on options, so by no means necessary am I a expert, but I will give you some things that I have learned in the past 2 to 3 days. So you for contracts, you have your calls and you have your puts. So if you're buying a call, you're basically going long, and if you buy a put, you're hoping that the stock goes down. So in a sense, you profit when the stock goes down, and for a call, you profit when the stock goes up. So it's been a bit of a learning curve, but I mean, you have, like, for example, one contract is 100 shares. So the benefit to that is, if you're buying one contract, let's just show you one here. So if I want to buy one contract of, let's use Facebook. So if I want to buy a contract for Facebook, you can see here the calls. So this is going long, basically. So imagine this says long, and puts, which means basically short. So the bid and the ask are here for the shorting, and the bid and the ask are here for the long. So let's go on to Facebook. So if we are on Facebook, for example, here, and we can see the price is 130.63, this looks quite bearish. I mean, it doesn't exactly look fairly bullish. I mean, we might come down to 129. For example, let's say if I thought we were going to come down to 129, I could speculate and say, right, I will buy some shorts at 129, or let's say 129. So what I would do is I want to short. So if I want to short, I want to go over to the right side, which is the puts. So I'm looking for 129, which is here. Okay, so this is the ask. So if I want to short, if I want to buy my puts for 129, it's going to cost me $1.95, times that by 100, because obviously 100 shares are in one contract. So basically that's what I would do. I would buy that. Or if I thought it was going to go lower, I would go to like 126. And as you can see, the lower you go, so 126, the contract's going to cost a lot less. If I think it's going to go to 121, it's going to cost a lot less. However, the higher you go, it's the stock market, and on options, it's always in the bullish favor, not the bearish favor. So that's why the contracts cost a lot more for the price going higher. So the market always tends to go higher than tends to go lower in the long run. So that's why the stocks are going to cost a lot higher for the higher prices. But let's go on to, so if you wanted to do, let's say, okay, let's do an example. So let's go on to the strategy builder. So if I was going to say, let's just use this is a demo account, so I can just use this. So let's say I want to buy, I'm going to do a put for 129.80. So I could, for example, go onto the strategy builder and find 129. So I'm going to buy here, and then I'm going to sell those shares back, okay, at, let's say, down here at 126. So I'm buying here at the ask on the put side for $1.92, and then I'm going to sell it back. I'm going to sell that contract back. Let's say, what did I say, 122 or 126? So 126 here, okay? So I'm going to sell it at 126. And then if I go onto the profile, this will give me basically my max profit and loss. So my max loss is $93, but my maximum gain is $207. Okay, so that's a 212% profit. I mean, I could buy that if I wanted to buy that. I basically just go on, down here and just go on to submit order. Go on to the ask, okay, and then I could just submit order, and then it says here I want to buy these, I want to buy the put for 129, and I'm going to sell that. I'm going to put it back to you, which is where put originated from. I'm going to put it to you, which is basically the sense that I'm going to give it back to you. You're forced to buy it back, basically, because this is a contract. So I'm putting this to you, and you have to pay, the 126, the person buying the contract. So it's going to cost me $85, and my commissions are $3. So much less than trading, so much less than day trading. And like I say, my maximum profit and loss. I'm not going to do this trade, but I just wanted to basically just to show you. So you'd go into profile, and you could see here 204. But that's if the contract expired. You could just sell the contract before. I think 80% of contracts expire. They don't let them go to expiry. Basically, you'd sell them before they expire. So like on here, it's supposed to expire by the 4th of January. However, I could just let that go today or tomorrow. Amazon's now come down. Let's have a look at Amazon. So Amazon's come down a little bit. I got in at, my average was 1660. So just get the it's only a little bit. It's because it's $1,600. So any drop. So I got in at 1660 around here, so a little bit less. This is where the line is here, so a little bit less. But like I say, it's $1,600, so 1% 1,600 or 10% is 160. So that's why starting to go up a little bit now. So I'll probably take 10%. I'll probably get this to about 160. Let's just check Amazon stock again. This is why. Okay, this is why. So you can see we have a red candle. We have a red candle. That's why this has gone down. So can't make too much. This is probably just a little, look, this just moves in waves. So wave 1, wave 2. This is probably going to come down, probably touch the EMA again, and then probably bounce off. So nothing really to worry about as such. This is probably going to turn red in a second, probably come down a little bit, maybe get 2 red candles, then bounce off. So on the 30-minute candle, we are bullish, so that's okay. Hopefully, if the bulls can bring this back up, that'll be very strong, and hopefully we can surpass my horizontal line here and go higher to the 1547, and I can try and sell for a profit. I'm really excited about getting into the options. I'm just going to do a couple months of paper trading, and then I shall let's move the screen. And then I might I will be funding my account, but I'm just going to do a couple months of paper trading and go from there. But I just wanted to get a video out just so you could guys see where the evolution of my trading is going, and by the looks of it, it's going in the direction of options trading. So hope that didn't confuse you too much. I'm still trying to learn as well, so it's a lot to take in, and it's by no means necessary easy to learn. However, with enough time and enough practice, anyone can achieve kind of anything they set their mind to. So at the moment, apart from my exams for university and work, my spare time is is going into learning options, and I will be practicing trading in a simulated account like Interactive Brokers. And then once my account is open, I will fund the account and we will start doing some options trading, and I will do some daily videos as well. So I will or I hope to see you in the next couple of videos. Like I say, I'm not sure when they will be. I'm still going to be practicing. I might do some recordings of my practice trades just to kind of show you what I will be doing when my account is live. So other than that, guys, thank you for watching, and I'll see you all in the next video.